Welcome back to another video, everyone. I have a very important update for you all leading us into this next week's pretty massive trading week. We have some absolutely critical pieces of economic data coming out, and those of you guys that are either traders or long-term investors not only need to know when these key pieces of data are being released, but also what these pieces of data mean in the grand scheme of things so that you guys can make better decisions in the present for your portfolios here. Now, as always, we're also going to be talking about some of your favorite individual names here: Palantir, HIMS, Sofi, NIO, some of the most relevant pieces of news that you guys may not be aware of, and some of these charts are looking absolutely awesome for continued bullish moves moving forward here. So guys, as always, if you guys wouldn't mind dropping a like down below if you guys do enjoy the information and analysis I provide for you guys in these videos here, and if you never want to miss another one, make sure you guys are subscribed and turn on notifications so you're notified every time these videos end up getting posted live. And as always, big shout out to all of the members of the private trading and investing community. Less trades, more profits. You guys have been absolutely crushing it. As you guys know, again, I'm running probably the best sale on this program here ever. We are doing 50% off, not only just your first month, but your first 2 months. It comes out to $1 a day, and you guys get access to all of the full-length educational curriculum, the full watch list of stocks and cryptos that are about to explode before they do. You get the pre-market plans, the private daily live streams, the macro research reports, the weekly research reports, the single stock research reports. Guys, the value in there is absolutely insane. You guys see all of the gains all the time. If you guys want to check out the reviews, they are on there as well. But let's get into it over here, guys. I don't want to waste too much of your guys' time. So again, use code MAY if you guys are interested in that, but let's get into it here. So as we all know, there are some preliminary talks happening this weekend in Switzerland between China and the United States as it relates to trade. Now, there's been a lot of conflicting reports over the weekend here that some of the representatives from China did walk out of a meeting pretty abruptly. But again, you do see this update here. I'm on the ground in Switzerland for the talks, and this doesn't track with what I'm hearing or seeing. A person briefed tells me no one from the US or China sides have walked out of the ongoing meetings, and we received this further update over here. China and US officials returned to Geneva trade talks venue in Geneva after break. So again, these trade talks are incredibly important. The big country that everybody is looking for the US to get a trade deal with, or at least the start of a trade deal with, is China here. So these developments are going to be critical for price action out of the market moving forward here. Again, we did see an initial positive reaction to that United Kingdom trade deal, and we could see a lot more of these coming out over the next couple of weeks here. Now, what I also want to start going through with you guys is what we have to look out for going into this next week's trading week. We have a couple of very key pieces of economic data that we have to be aware of. On Tuesday, we are going to be receiving the April Consumer Price Index data, CPI. Now, that data is going to encompass a little bit more of the time frame when these tariffs are going into effect. So we all know that the Federal Reserve is very focused on the potential upside risks to inflation right now, and are kind of discounting and not paying as much of attention to the slowing growth and the potential increase to unemployment. They are very worried about inflation coming back to the upside here. Now, for those of you guys that have been watching these videos, you guys should know that these tariffs are most likely, if anything, going to lead to just a one-time price increase, which then could lead to a drop in demand, slowing growth, increased unemployment, and a further need for the Federal Reserve to cut rates by more than what the market is currently expecting here. Now, what could lead to that initial price increase to the upside here? Well, we also have to worry about this situation with container shipments. So shipping group Maersk over here, I always mispronounce that name, said on Thursday container volumes plunged 30 to 40% between US and China in April as the trade war erupted between the world's top economies. Now, remember, we do have a delay in when these shipments actually get to the United States. It's about 25 days to get from China to California, and then an additional 10 days to get to New York. So we have not really seen or felt any of the effects of these container shipments moving significantly to the downside yet. Remember, just thinking about this in normal supply and demand metrics, if supply is lower and demand is staying the same, you could see an initial move to the upside here in consumer prices. But when thinking about that potential following drop in demand, well, what is that actually going to be based on? Well, it's all going to have to do with the overall strength or weakness of the consumer. And that is when we start to get into retail sales later on in the week on Thursday at 8:30 a.m. Now, recently, we have seen a pretty significant uptick here in retail sales. Now, this is a direct result of inflation expectations moving significantly to the upside, which I've shown you guys this chart time and time again here. When people and consumers in general think that prices are going to be a lot higher in the future than they are right now, well, it makes a lot more sense for them to go out and purchase those goods and services in the present rather than waiting. This is a very similar phenomenon to what we saw in imports significantly moving to the upside in the first quarter of 2020. Which really created that significant drag on GDP, causing GDP to come in at negative 0.3% in the first quarter. Now, when you think about that initial move up there, guys, that is exactly what we are seeing. Demand is still there, even though we are seeing consumer sentiment fall to levels that we have not seen since 2022. But consumers can't just continue spending forever. If consumer spending or consumer sentiment here really continues to deteriorate, that is when we start to see that potential demand drop, leading to slowing growth, potentially increased unemployment, and having that muted inflationary effect that a lot of people are forecasting. So again, everything is going to come down to not only the overall strength of the consumer, but the actual actions that these consumers are taking. Now, we are going to be getting another reading of consumer sentiment at 10 a.m. on Friday, May 16th here. We are going to be getting a new reading of those inflation expectations. So it's really going to give us an insight here to how everybody is really feeling about the prospects of the economy, which again is going to obviously relate back to the market going into the end of the year here. Now, this is all of the data that the Fed is looking at in order to determine when the appropriate time will be to cut interest rates. So when we look at these probabilities right now, there is currently about a 17% probability of a rate cut coming in June. And when we look at July here, those probabilities step up a bit, going to 51.1% of a 25 basis point cut or a quarter percentage cut in July. Now, these expectations have been slowly moving out here, mainly due to the uncertain nature of this new trade policy and the fact that we do not know when these new agreements and these trade deals are actually going to get done. So that key word, guys, here is really uncertainty. We need more clarity out of the economic data, and we also need more clarity out of these trade policies, which is where these new trade deals are coming into play. And that's one of the main reasons why we have seen ourselves on the overall market here. This is the S&P 500 futures here, stuck in the liberation zone that I have been outlining for you guys over the last couple of weeks here. We outlined this potential move up into this zone, but there really wasn't an argument at that time to continue further above this zone here because, again, a lot of these new tariffs that were put into effect on Liberation Day are still in effect. And if the market was selling off from here before, there really isn't an argument for the market to continue higher unless we get a lot of new positive information as it relates to the market here. Now, let's get into a couple of these names, talk about the charts here, what the prospects are for a couple of your favorite names going into this next week's trading week here. So the first one that I want to talk about is HIMS. Again, this one has had a very positive reaction after their earnings report last Monday here. And as I've outlined for you guys, to me, and in my opinion, this is not the time to be going out and buying this name here. This is the time to either be, if you're a short-term trader that was buying at that $30 level that I was outlining for all of the members of the private trading investing community there. This is a time to be taking profits, trimming, selling some calls against your position here in order to make sure that you are capitalizing on this move up. Now, that's just for short-term traders. For long-term investors here, again, this one, especially after their earnings report this past week, looks like an absolute growth monster. What we easily could see now out of HIMS is a period of consolidation where we see this 10 exponential moving average catch up, and we actually set up a very, very bullish setup moving forward here and potentially going up to these highs that we saw in February. Now, we will need to form that range. If we do end up forming that range, I will be outlining not only for the private community there, but for you guys that are interested in HIMS in these YouTube videos, what exactly I would be looking for. Now, another one that has a very, very similar look to HIMS here is Sofi. Sofi was one, again, we were talking about this post-earnings consolidation setup here. It did take a little bit more time in order to play out. You had some false breakouts in here, here, but the fact that SoFi has just kind of started holding this daily 10 exponential moving average here with a slow grind up, to me, is a very, very solid sign, especially after their very positive earnings report. Again, if we see a very similar look to HIMS, further consolidation here, and it holds this blue line here, this daily 10 exponential moving average, we could be setting up an incredibly bullish setup on SoFi where we could move right up to that 1450 area and maybe even get all the way up to 15 in the near term. And also one thing that I forgot to mention when we were talking about HIMS there, sorry guys, I have a lot of tabs up trying to get through all of this for you guys. Goldman Sachs did recently increase their position by 49% in HIMS. Again, seeing this institutional interest in these names here is always a positive sign. Now, I also want to talk with you guys about NIO here as well. We did see a little bit of a false breakout here on Friday. Again, what have we been talking about with this name since I called this breakout from this area here all the way up to that $4-ish level? Again, we were looking for that pullback to kind of the midpoint of this zone. We have seen that. And NIO, again, if you can clear above this 410 area here, again, could easily get that move up to that 200 exponential moving average here on the daily. But again, with NIO, I've said this before, I will say it again, it is all about execution for NIO in 2025 and 2026. There's been a lot of overpromise and underdeliver from management on this name here, and I think investors are kind of fed up with a lot of that, and they really want to see results. Now, NIO did just hit a pretty important milestone here too. The NIO brand reaches 700,000th delivery milestone. Again, we are going to need to see a significant more amount of deliveries here in order to, again, grow NIO as a business, and they need to be more efficient with their spending in order to reach those profitability metrics. But again, seeing these types of positive developments here, again, NIO brand delivered 19,269 vehicles in April, a year-over-year increase of 23.36% is always a positive thing to see and a welcome development for investors. Now, the last one that I want to talk about is probably the retail juggernaut, the one that you guys are probably the most invested in, I would think, in this name here, just because of how significantly it has moved up over the last year and a half here, and this is Palantir. So, with Palantir, guys, again, we have to be careful with this one just because it is commanding an incredibly rich valuation in the marketplace right now, even though their fundamentals are incredibly strong. They are growing at a significant pace. U.S. commercial revenue growth, government revenue, global revenue is all growing at a very significant rate. They're breaking records on the rule of 40 there. But again, with this type of valuation, the market is going to hold this one to a little bit of a higher standard, but that does not mean that you could not see significant price increases to the upside if this market holds on. And we do see that potential move out of this liberation zone to the upside here on ES to potentially right around this 58-59 area. So guys, that is essentially going to wrap up this video here. We have an action-packed week ahead. Again, make sure you are paying attention to CPI, PPI, retail sales, and consumer sentiment going into this week. We are going to get a lot more insight into not only what the consumer is thinking, but also into how the consumer is acting. Because as we've seen recently, especially with retail sales and consumer sentiment, retail sales has been going up, but consumer sentiment has been continuing to deteriorate. Now, remember, we have to kind of relay that back to that potential for the drop in demand after this potential price increase that we may or may not end up seeing here. Again, you got to think a couple steps ahead in this market here. You don't want to be thinking in the direct present. You want to be thinking about what could potentially happen and unfold over the next couple of weeks, the next couple of months, and next couple of quarters from a lot of different perspectives so that you can be a nimble and agile market participant moving forward. So guys, again, if you did enjoy the information and analysis that I provided for you guys in this video here, make sure you go down and hit that like button. Costs you nothing to do it, but helps me out a whole lot in spreading out these videos. And again, if you never want to miss another video like this, make sure you're subscribed, turn on notifications. But until next time, guys, I will see you. Peace.